Hello and welcome everybody to the third part in our series of Future in Focus here at the Global Treasurer. Today I'm joined by Karen Hom, Managing Director of Cash here at Standard Chartered. Welcome, Karen.
Hi, Jeremy.
Obviously, as a third in our series, there's been 2 videos already on this topic, and they've been kind of recorded a few months back, and they were looking at the future then. So I'm just wondering, from your perspective, those videos kind of focused on sustainability, looking for talent, and cash and liquidity management. How have those problems evolved over the past 6 months since the first one has been made?
It's been an interesting journey for us in the banking industry as we look to help our corporates support their liquidity in such a fragile and changing environment. At first, we saw an immediate draw on revolvers, a need for cash at the head office, and really an immediacy to make sure that they could pay their customers, they could pay their employees. What we've seen is the pandemic clearly went on longer than anyone ever planned for. And corporations started to manufacture again, invest again, but overall with a view on efficiency and how to make their processes better for the future. We've seen an investment in talent as well as companies look towards the future and making sure that they have an agile workforce that's in line with technology, attuned to the developments in the industry, and looking forward to the future.
Great. And then it's been 6 months. Things are starting to look up, though I wouldn't say we're out of the woods just yet. What are the problems or the issues, I guess, treasurers may face in the next coming 6 months, till the end of the year?
I think what we've seen is that we're now adjusting to a new normal where we may get fourth waves and fifth waves. Companies are used to now how to deal with that. They still have their financial targets to meet. There's a lot of pressure on companies to start going back to the 2019 and early 2020 production levels. So we're seeing a big stress on efficiency. Operational efficiency is key to try and digitize as much as possible, take manual processes out of the equation.
So over the past 6 months, a topic that has gained a lot of prominence has been sustainability, be it through ESG initiatives or ESG disclosures. So for the function itself, how is ESG and sustainability going to factor into both the way they do business and the way they grow their business?
We've seen such a positive trend, especially for the U.S. companies towards sustainability, investment in sustainability that may have been depressed for some years for numerous factors. We're seeing sustainability even go into revolvers, key metrics that the Treasury is being tied to for sustainability factors. But what's exciting for us as well is companies now have the ability to build a sustainable treasury. So they're not just going through the data that they used to go through, the day-to-day processes, but they're actually looking to how they can use the data that they have, use the technology and automation that they have, and really be more strategic, more in line with their businesses. So it's an exciting time on the sustainability and growth side as we look forward. That immediate environmental is definitely being invested in, but we're seeing such a healthy growth in the sustainability and growth sectors as well.
If you wouldn't mind, I would like to kind of dig deeper into the liquidity aspect of sustainability. Why is it important for the function to be looking at sustainability?
Liquidity has been such a hallmark of the current crisis. Access to liquidity has been prime importance for our companies, both by bringing the accessible cash back to the U.S. and drawing on their revolvers. Over time, we've seen companies more willing to go out slightly longer on tenor, giving up on yield overall, not only in the low interest environment, but also because they're going shorter term. We're seeing the growth of sustainable investments that gives them the ability to help meet their environmental metrics. However, as we look forward, we're wondering how long that duration is going to go, when companies are going to be ready to start making those capital investments that they made before, and utilizing their cash for the benefit of their shareholders.
And you mentioned earlier in the conversation, companies have had to finally adapt to the new ways of working. And one of the ways that they've done that is through technology. And we're still not there to find out what the quote unquote new normal is. So how do companies have to adapt and use technology to kind of bridge the gap between what it was in the past and what will it be in the future?
During the pandemic, with everyone working from home, we saw a real need to reduce the documentation that traditionally was associated with transaction banking flows. No one was in the office to receive paperwork or to send paperwork. Some people didn't even have the blue pens that they needed to sign. Just overall, there had to be an alternative through technology to make the regular day-to-day business flows. And while many governments had adopted alternatives, the uptick from the companies themselves as well as their customers was slow. And we saw that the pandemic forced the companies and the customers to start utilizing those technological advances more. So now the streamlining of documentation to the extent possible is significantly reduced. Even if it's a scanned copy of a signature, we're not physically mailing documents like we did before. We hope that the continuation of this push through reduced documentation as well as more growth on the payment side, automation of payments, instant payments, QR collection methods, just takes away the paper, takes away the work on the reconciliation, and makes companies more efficient, and overall the customers have a smoother process.
And you can't talk about technology today without talking about APIs. A lot of banks are pushing out APIs for their corporate customers. What are the real big benefits that corporates will see by adopting and using bank APIs?
Initially, the focus on APIs was on reporting and digitizing data, getting data into the ERPs faster and reducing manual processes. As the API growth has continued, we've seen the ability to initiate payments, and we see continued automation of the processes. What this does for treasuries, quite frankly, is it frees them up to do more strategic planning with their business partners and less of the day-to-day transactional processing.
And how do companies maintain this sort of adaptive mindset? The pandemic has forced them to make these changes. What needs to be done to keep this momentum going?
We think that everyone sees the benefits now of technology. We've seen such a relief to get the documentation out of the system. We still need signatures, but we can authorize signatures digitally. We still need to make payments, but to the extent that we can not go to a physical bank branch or write checks, and we can accept methods that are straight through, helps the process be so much more efficient. We see that that's the natural course of being. We expect that to continue. And in fact, as customers and companies become more comfortable being more agile, we see that they'll ask for it more. There's less resistance to the way they used to do things. And the hope is that we'll just continue to move forward. It makes the industry more efficient. It makes the whole collection and working capital process much tighter. It helps the companies use their liquidity better and overall be able to invest more in their business.
And the pandemic has really changed the ways that we work, especially the way that managers they interact with their employees. So for them, really, what do they have to do to bring out the best of their employees?
The flexibility of our management in these times across our companies and even in the banks has been so important. We've seen some companies really be leaders in this space. Initially, some companies said, stay at home for the next year. It doesn't matter where you work. That agility gave employees the flexibility to think about work in a holistic set for how they bring work into their life instead of the other way around. We hope that this agility continues as companies have been successful in the remote option. Technology has been such an important play, and we expect that to continue going forward.
And to go to the new hires, with all the talk of remote working and flexible working, how has that impacted the way companies are looking at the way that they hire new talent? And with how much technology that we're also using, both to communicate and also to manage the treasury function, what kind of more diverse skill sets are needed to really tap into that new technology and to tap into a more diverse workforce?
It's been such an interesting change in how we look at talent. Companies are looking more for diversity of skill sets, diversity of ideas. It's not just people who can read spreadsheets and do forecasting and do transactional processes. Companies are looking for talent that are really highly engaged in technology, who can manage data to help them reach new business levels and strategic forecasts. We're seeing such a diversity of thought where people who didn't used to be invited to treasury teams because maybe they didn't have the background in transactional processes or finance are welcomed. And the skill sets around technology, flexibility, ability to think forward strategically is even more important than it ever was before as they look to align better with their businesses.
And I've heard 2021 described as the year of two halves. The first part of the year really holding down the fort, but the second part, with things looking up, and treasurers looking more towards recovery. So, for the next 6 months, is that really the objective of the treasurer to guide their company through into the recovery phase?
We sure hope so. We sure hope so. We're starting to see mergers and acquisitions pick up. Companies are investing again. We're seeing workforces, manufacturing go back into business. But we're seeing a workforce and a management that is ready to react and redeploy. Perhaps they've relooked at their production centers and redistributed globally so that if there's an outbreak in one region, they can be more flexible and adaptable to pick up in another region. We're all really hopeful that we'll go back to a stage where it's more predictable. But this pandemic has taught us all to be more flexible in terms of how we look at even something so simple as our workforce, where we're manufacturing, and how we're selling.
And you mentioned earlier the emphasis that's being put on sustainable finance. Over the next 6 months, what are corporates going to have to do to try to meet up to those expectations? There's a lot of talk right now on ESG disclosures and such. What does the function need to do to kind of get up to that level?
We've never heard so much talk about sustainability across the board, across companies. And the culture of the companies is changing, where every employee has a part to play in the sustainable growth of their companies in the future. It's exciting to see companies focus on it from a banking perspective. We're supporting it from a funding and liquidity side. The companies are getting pressure from their shareholders on what they're doing in the future. And even the companies themselves are watching their competitors to make sure that they're staying aggressive and competitive in this space.
And that's all the questions for me. Just want to thank Karen for her time and for her insight and expertise on this subject matter. And I hope that everyone else has a good rest of the day. And thank you for watching.
Thank you, Jeremy. And thanks to the Global Treasurer.